the aviation space. 3-4 days running that the stocks have been just flying away. Ever since we did that interview with the SpiceJet management Ajay Singh, where he said that the Indigo IPO will re-rate the entire sector, these stocks have been soaring. Kapil Kaul, who tracks the space very closely and is the CEO of the Indian Subcontinent Centre for Asia-Pacific Aviation, joins us on the phone line. Kapil, hi, good morning. It's very interesting, the comments that the SpiceJet management made, but what's the sense you're getting about how much the sector could be re-rated or what the growth could be now that we have the Indigo IPO as well on the anvil?
So I think the Indigo IPO is critical for the sector, because not only for the airline sector, I think it's critical for the entire aviation sector, because I think it's fundamentally going to re-rate the sector, especially the kind of competitive dynamics that we saw over the last 7 to 10 years. And here is a IPO which is potentially going to value an airline in India at about $4 billion. And that's I think, remarkable. That will be a step-up change towards the next decade of stability and growth, perhaps, for the sector. So I'm sure once the Indigo re-rating happens, the second step would be that you may have another IPO, as we've been saying. It's possible for Go to look at the IPO. They're also well placed, and potentially, I think the capital raising of SpiceJet, which is critical to me, would perhaps happen post the IPO.
Okay, morning, Kapil. What's changed actually in the IPO in the airline space? Just 2 years ago, one big airline had just capitulated, and another one was so desperately in need of money that it had to change its promoters. That was also a bailout situation. What has changed? Is it that the number of players have come down? Or is the market picking up? What's changed?
I think both, actually. The fuel has changed the dynamics. ATF has been a big challenge for the sector. It almost in certain years touched 60% of the revenues. Now with the fuel price, which is currently at under 50, if you see the Brent at under 50, though even the fuel benefits are not fully passed on, I think that has structurally changed the sector. So I think if I have to take one single factor that has changed the outlook of the sector is that fact that ATF is pretty low, and I think that ATF is going to stay lower at least in the near term. And that to me is the first important factor that's the basis for this optimism. Second, I think the growth has been stable. You're seeing growth rates which are similar to what we see in 2004 to 2009, which saw the domestic growing at about a CAGR of about 18.5. So I think the growth is stable, and we're going to see a high growth rate. The cost structure will be more, as I said, lower, driven by fuel cost. There is likely currency stability. So overall, I think it's good for the sector. And third important factor, Lata, was that I think over the last 1-2 years, we didn't see the kind of capacity that has been that normally is inducted in the sector. So it's a combination of moderation of capacity. It's a lower cost base. It's a stable growth rate. A combination of these factors, and I see that these three factors will continue to play in the near term, and which will be positive for all the players.
Kapil, you've tracked SpiceJet for very many years now. What did you make of the comments that the management had that, where Ajay Singh told us that if Indigo can be valued at 25,000 crores, he doesn't see why SpiceJet should be valued at just about 2,000 crores or so. Do you think SpiceJet deserves much higher valuations, and do you expect the profitability to continue?
Well, I think SpiceJets obviously would want to wait for this Indigo IPO. There would be a sense of, as I said, re-rating for the sector. Obviously, if Indigo gets valued at $4 billion, then there would be an optimism that the promoters of SpiceJet to go look at a significantly higher valuation that currently exists. But I think the valuation of SpiceJet would depend upon their business case. It is going to be basically depending upon, I think they're looking for a 100 aircraft order, so there needs a fleet delivery program which is committed, and there is a clear financing committed for that fleet plan. It needs a new management structure. It needs further stability. I would think the next 2-3 quarters of profitability, especially from Q3 of this fiscal, would further enhance their, enhance the sort of evaluation expectations from SpiceJet. But SpiceJet's future and their valuation will depend upon the business case. I don't know what the business case is there currently from next 5 to 10 year perspective. But as long as there is a solid business case with fleet bets that are taken, which are significant. The management structure gets changed, and there is a consistency in profitability. I would think no reason why over the next 3 to 4 quarters, or maybe in mid of FY16 or later, the valuation of SpiceJet would reflect the fundamentals of the sector.
So you're saying there is a case to be built that these companies like SpiceJet and Jet Airways have seen the worst behind them, and they'll continue to see profitability from here?
Yes, I would think that Spice, though Q4 would have a modest loss, but overall I see a profitable year. But SpiceJet's valuation, as I said, is obviously the fundamentals of the market are very strong, but there needs to be a strong business case as well, which the promoters need to build a solid business case, which will have a clear direction towards sustainable profitability. So I think market will play its role. I think SpiceJet's management needs to play its role in terms of building a business case which will help them to look at higher valuation.
So a narrowing of the valuation gap is not a given. SpiceJet will have to prove it.
Well, I don't think there could be, for 24,000 crores, obviously I expect SpiceJet to be valued much higher, as I said, depending upon their business case and how they set themselves up. But I think there will be a significant gap between Indigo and SpiceJet, but it will be much better than what the valuation of roughly about 300 million plus that currently SpiceJet has.
All right, and finally then, before we let you go, between the three, Indigo, SpiceJet and Jet Airways, is it a no-brainer that Indigo will continue to be the best performer? Or do you think that, from an investment point of view, perhaps even some of these beaten down names like SpiceJet and Jet Airways have a chance at outperforming?
Well, I think, as I said, Indigo is not stopping at what they have done. I think they're closer to 100 aircrafts, and we see them getting about 50 to 60 new A320 neos into the sector in the next 3 years. I see them closer to 50% market share. So I think Indigo is going to get further stronger. I don't see any reason why Indigo would not be stronger. But that doesn't mean that airlines like Spice or Jet would not have a upward direction in terms of their valuation and growth plans. I think there is enough appetite in the sector. As long as the fundamentals stay as what they are, and I think both the managements of SpiceJet and Indigo built a business case which investors believe in, I see no reason why there would not be an upward revision in the valuations of both these airlines, but largely depending upon how the promoters of both these airlines build a solid business case going forward.
Fair point. Thank you very much, Kapil, for joining us and putting the aviation industry into perspective. So the strong boy is winning out, and that's what exactly is happening in the markets as well. The weak are being separated. It's TCS which is taking it in the chin with a 4.2% downtick at this point in time, but the index as a whole has actually cut its losses and is now standing almost in flat terrain as far as the Sensex and the Nifty are concerned. And they're being actually held by global cues. The commodity markets did not give up much, except in the case of crude, which was an individual case of the IEA, the International Energy Agency, cutting down its